At first glance, it looked like the market had a pretty good day. But if you dig just a little deeper, you'll see a massive contradiction. Something that signals a huge and kind of ruthless shift that's happening right now in the economy. Let's get into it.
So, the S&P 500, it jumped more than 0.7%. And you might think, oh, great earnings. But nope. The real catalyst was a Supreme Court decision that struck down global tariffs. That took a huge weight off the economy. So investors were buying like crazy, thinking the coast was clear. But it wasn't clear for everyone.
Okay, let's start with our first deep dive. This one is a perfect example of what happens when fear about the future completely stomps all over the reality of the present.
So let's talk about the move, Booking. The online travel giant just plummeted over 8%. We're talking one of the biggest drops in the entire S&P 500. And what's wild is that this happened right after the company posted a really solid quarter, even beating what analysts were expecting.
So, what was the driver here? In a word, panic. Pure AI panic. Investors are completely ignoring today's good numbers because they are terrified that pretty soon AI-powered digital travel agents are just going to cut out the middleman, sites like Booking, and completely wreck their business model. It's that whole shoot first, ask questions later thing in action. So wait, even with a great earnings report, the market hammered them just because of a potential AI threat down the road?
You got it. That's the new reality we're in. This really says it all. Beating earnings doesn't matter if Wall Street is convinced a chatbot will steal your customers. Now let's flip the coin and look at the other side of this whole thing. Because for every company getting punished by AI fears, there's another one getting rewarded for actually building its foundation. This is what we call the picks and shovels part of the AI gold rush.
So the move for Comfort Systems was the total opposite of Bookings. Just a steady, quiet climb of 2.4%. And the way it moved is so important. This wasn't a crazy meme stock jump. This was the sign of big, institutional money consistently buying in.
And the driver here is the nuts and bolts of AI. Everyone's obsessing over the cool new software, but the smart money, they're investing in the boring but essential stuff. AI data centers generate an insane amount of heat, and Comfort Systems makes the heavy-duty industrial cooling systems needed to keep all those expensive servers from literally melting. So while everyone chases software, the real money is in the hardware support.
That is exactly it. This quote just nails it. Everyone is looking for the next big software stock, but the guys installing the air conditioners for data centers are the ones quietly printing money. Okay, and that brings us to our third and final case study. This one really shows the brutal side of this whole AI wave. What happens to companies that get left behind?
The move for Akamai. It was an absolute bloodbath. A massive 11% drop right from the opening bell. This wasn't some slow decline. This was the market making a very loud statement and punishing a legacy tech company.
And the driver? It's simple and it's ruthless. It's capital rotation. Big-time portfolio managers are selling off their shares in older tech companies to free up cash for what they're calling the AI supercycle. Basically, if you can't show them a clear AI story, you're not an investment, you're a source of funds. So if you aren't clearly an AI play, you're a source of funds. That's the cold, hard logic of it all. And this quote just puts a bow on it. Akamai learned today that being legacy internet infrastructure is basically a curse word in a market that only cares about the next generation of computing. And that really ties this whole deep dive together, doesn't it? So what's the bottom line here? How do you actually use this information? Here are 3 key talking points you can take with you to sound like the smartest person in the room. First, on Booking, here's what you say. The AI anxiety is spilling into travel. Booking beat earnings but still tanked 8% because the street is terrified chatbots will become the new travel agents. It's a key risk for the entire consumer portfolio right now. For a backdoor AI play, look at Comfort Systems. They're seeing unprecedented demand. While everyone fights over chips, someone has to install the industrial HVAC so data centers don't overheat. It's the ultimate picks and shovels trade. And finally, for Akamai, this is your takeaway. Akamai's 11% drop shows the brutal tech rotation in action. The market is punishing legacy infrastructure to fund the AI supercycle, creating dangerous value traps for those not paying attention. So, Booking holdings dropped 8% today because Wall Street thinks AI chatbots will replace travel sites. Do you agree that the traditional booking model is dead, or is this just a massive overreaction? Let me know what you think in the comments. Comment below.
Subscribe to Market Fluency for your daily edge.